Thursday, June 29th, 2017, Monaco 64, home of alternative economics and contrarian views. So, I want to talk about the 103-year bubble that's been going on, and I think it's the bubble to end the horrible, in my opinion, monstrous monetary financial system we have. And that bubble is the central banking PhD, as Jim Rickards calls it, the PhD, system, monetary system that we've had, where a bunch of individuals, think that they can manage, the global economy. Like 12 guys or girls in the FOMC, some, 9 people in the MPC in the Bank of England, a few people in the Bank of Japan and the ECB. They think they can sit around in a conference or a symposium and tweak the global economy, tweak the monetary system, tweak the credit markets, just because they talk. They've got their jargon, their terms like forward guidance, quantitative easing, inflation expectations. They make it seem like it's a science, and it's not. It's just voodoo. Voodoo economics, PhD economics, it's rubbish. And I think that system is about to come to an end. And that would be the best thing for humanity, in my opinion, because we'd go back to a system where the market decides, what money is, what the price of credit is. That's the best thing that a market does, is market gives signals. We don't need 12 people in, in Washington, D.C. deciding what someone who wants to lend money in Idaho should charge. We don't need someone in Frankfurt deciding what someone in Lisbon should charge for lending money. And yeah, we don't need someone in Tokyo deciding what Mr. Yamada has to charge someone for lending money. It's just it's just crazy that we haven't learned the lesson of the Soviet Union, which was a centralized system that collapsed, didn't work. It just discouraged all the good things about free market, which is price signals, information, the invisible hand. We don't need anyone to tell us. The interaction between people and markets and prices is the best thing that we can have. But the problem is that a lot of people who are against free markets, the leftists and even the people in the right are against free markets because they kind of think the Fed is necessary, and it's not. And the people in the left think that what we have now is free markets and capitalism, but we don't. We have a fascist, communist system where the elite, the very people at the top, they've got all the power and wealth, and the proletariat at the bottom is like poor. That's what it's becoming. It's becoming like the Soviet Union, and we need to go back to a system where there are no monopolies, where there is free market competition, where if you provide a good service and make a profit, you stay in business. If you don't, you go out of business. That's how free market capitalism works. It incentivizes people. It also encourages people to save at a, when rates of interest are left at a reasonable level to the market. And what does saving encourage? Encourages investment. And right now, for the last 10 years, what the central bankers have done is they have created a financial recovery, not an economic recovery. They've financially engineered a recovery where the only parts of the economy that have benefited have been the financial sector and the government. And why do I say that? Well, because they've provided fiat money out of thin air to those two sectors so that they can refinance their balance sheets instead of, like the banks or financial institutions, for example, instead of taking the money and lending it to the real economy for investments in small businesses where jobs can be created, they've taken that money and financially engineered their balance sheet. And by that I mean they've done buybacks to buy back their stock. And the only way they can do that is through borrowing. So they borrow the money and they take that money and buy stock. They don't have the cash. They just borrow it at almost nothing. And governments as well, they keep spending. And that's why the national debts have gone up so much. And the central banks have kept government bonds artificially high, their prices, which means that the interest on these bonds have been kept artificially low, which means the government can borrow very cheaply. So that's what they have done. How can countries that are basically up to their eyeballs in debt have rates of interest that are below 2% or near 2% or zero? Doesn't make sense. In a free market, we'd never have that. And the reason why I'm talking about this is that, there's some people out there who see, that the Fed has done the wrong thing. For example, there's one guy called Lacey Hunt, who used to be a Fed economist, and I'll put the article below in the description. He was at a conference recently, and he said that the Fed has undermined the economy because of this financialization, as I said, because the money hasn't gone into the real economy and investments. But at the same time, he apologizes for the Fed and says, oh, they did the right thing in 08 and 09 to save the system. Instead of saying we don't need a Fed. But one thing he has said, though, is that as long as this recovery has been and the tightening that the Fed is doing, none of the previous recoveries that have been this long, or expansions as they call it, and where the Fed has tightened, none of them have witnessed a hard economic recession, a hard landing. So expect something huge. I think it's going to be huge, and hopefully it will be the end of this PhD dictatorship that we've had. It's increased a lot more in the last 25, 30 years. It's been a slow process. Started in 1914. But do we really need Mark Carney, Mario Draghi, Janet Yellen, and other central bankers to be paid millions of pounds or hundreds of thousands of dollars to sit there and look at these stupid economic statistics and talk about interest rates, how it shouldn't be at 0.25, but it should be at 0.75, about forward guidance, and coming out every 3 months and changing their forecasts. I mean, a monkey could do that. A monkey could sit there and say, woo, 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 here it is. A monkey could do it. So hopefully, we're working our way as a society to having our own money. And maybe that's what cryptocurrencies are about. But I think it's still very early days. Very few people are into cryptocurrencies. I think a lot of, one thing that's encouraging is that a lot of young people are into it, and that's what we need. We might end up having several different currencies, which is nothing wrong. You look at the history of the United States. I think back, after the revolution against the British, there was loads of coins circulating in the U.S. The Spanish silver dollar, the pieces of 8, you know, the French coins, British coins. Yeah, it's like a free market in currency, and the best currency wins. You know, people will decide which, you know, Gresham's law. If they think something, you know, a currency is flawed, they'll spend that currency, but keep the good currency. Let the market do it. I know it's probably wishful thinking that this central bank bubble bursts, but it would be, I think, the best thing that could happen to humanity. You know, we don't need... the problem with the central banking system is that it's a monopoly, and it's controlled by very few people at the top, you know, the financiers. It's what a book by Carol Quigley, who was apparently, well, according to Clinton, his favorite teacher at Georgetown. And so it says here, Tragedy and Hope shows the years 1895-1950 as a period of transition from world dominated by Europe in the 19th century to the world of three blocks in the 20th century. But basically, you know, Carol Quigley says that the people who run the world, you know, the Bilderberg people, the CFR people, the Royal Institute for International Affairs, or Chatham House people, these are the people who control finance, you see, and they want to be in charge. As David Rockefeller said in his memoirs, you know, we know best how to run the world, the bankers. And this is what we're up against. This is what the central banks represent. They represent the banking oligarchy, and I'm not against banks. I think banks and currency and money provide a great service for advanced industrial society where we need indirect exchange. What I'm against is an oligarchy that controls the banking system and the money. We need it to be decentralized and a free market. You know, government has to get out of you know, regulating and creating banking cartels. They need to let the market do it. Of course, that will be hard because governments always want to control the money because they want to have, you know, ready access to money. You know, they want to buy votes. But we need to, you know, say no to this. And that's why I do these videos, because I know the system, because I worked in the City of London. I started out at a small bank in Geneva, and I learned how the system worked. I didn't know this in the beginning when I started out, but through the years I started looking into it. I was interested not just in the day-to-day business, which I had to do, of course, to earn a living, but I was interested in the why of the system. You know, I always ask questions, and that's what I found, that this system is a fraudulent system based on money that's not backed by anything. That's not, that has no value. It's only backed by the, you know, like by the law, by, you know, monopoly law that the governments have given, or the legislatures have given to these banks and central banks, or the legal tender laws. What we don't need a banking law. All we need is the market law. And a lot of the leftists don't understand this. They want more of it, and they don't realize that it's actually hurting them. It's the system that they want to keep and perpetuate that has created all the inequality. So the best thing you know, the leftists, or, you know, labor unions could do is ask for the, you know, abolition of central banks, so you could have real sound money, competitive money. And the same thing for the people on the right who think the Federal Reserve, you know, is a great institution and that we need it. We don't need it. So hopefully this bubble, central banking bubble, will burst sometime within our lifetime. I know Janet Yellen said the other day that there won't be a big crisis in her lifetime. So that's a bit like Ben Bernanke back in 2007 when the subprime crisis was in full tilt. He said, "Oh, I don't think the subprime crisis will spread to the main economy." How wrong was he about that? So if you enjoyed this video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet, and watch me on steemit.com as well. That's STEEMIT.com, and follow me there as well. I'll talk to you later. Bye.